What if you could read the Forex tape the same way liquidity providers do, spotting where structure really breaks, where stops are pooled, and where the next expansion leg is likely to start? Today we're diving deep into advanced market structure, break of structure versus change of character, liquidity sweeps, order and breaker blocks, and even how Wyckoff phases overlay the modern smart money concepts framework. Quick risk disclaimer, this is for education only. In pure price action, a trend is simply a series of higher highs and higher lows in a bull phase, or the inverse in a bear phase. A break of structure, or BOS, confirms continuation. Price closes beyond the most recent protected swing, so bullish BOS is above a prior high and bearish is below a prior low. BOS means trend continuation. Institutions inject volume with the prevailing order flow. CHOCH, or change of character, signals the first decisive violation against the prior trend. You can think of it as Wyckoff's secondary test that flips control. Make sure to mark the internal range, which is the recent impulse, and the external range, which is the higher time frame swing, so you don't confuse a lower time frame BOS with a higher time frame pullback. Equal high and equal low pools act like magnets. A liquidity sweep happens when price pierces that pool to trigger stops, fills institutional orders, and then reverses. Here's the thing. Inducement is when market makers entice retail breakout orders so they can offload positions at premium or discount. Picture a 15-minute EUR/USD spike through Asian session equal lows followed by a violent rally. That's your classic ICT turtle soup pattern. Alright, so let's break this down. An order block, or OB, is basically the final bullish or bearish institutional candle before a fast move happens. This spot often becomes future support or resistance, and it's a great entry zone for traders. Now, a breaker block is a bit different. It's a former order block that fails after a break of structure, and then price comes back to retest it from the other side. This can be a strong reversal confirmation and a solid entry filter. Then we've got the mitigation block. This is the area where institutions, mitigate their drawdown from earlier positions. It usually lines up with the 50% mark of an impulsive leg, and it can be a really good partial take profit zone. These blocks often overlap with premium and discount zones of the larger swing, which gives more confluence when you're setting your targets. Smart money concepts didn't replace Wyckoff, they refined it. Accumulation leads to a break of structure, then mark up. That first break of structure out of Wyckoff phase C acts as a change of character on intraday charts. Distribution leads to a break of structure, then mark down. The same logic, just inverted. Breaker blocks often print at upthrust after distribution highs. Let's use a daily GBP USD example. Phase A, you get a selling climax around 1.2000. Phase C, there's a spring sweep to 1.1930, and then a break of structure above 1.2250 launches the markup. Here are the top-down steps. On the monthly and weekly, you want to identify the major external range. Then on the daily and 4-hour, locate your change of character or break of structure and tag premium or discount. Next, on the 1 hour and 15-minute, really drill into liquidity sweeps and those refined order block entries. For a live walkthrough, I'll show you how a 4-hour bearish change of character in EUR/USD translates into 15-minute breaker block short setups, all aligning with liquidity above a prior high. And hey, feel free to pause and replicate each step on your own chart. Watch out for confirmation bias. Never marry an order block without validating it with liquidity and higher time frame bias. Take partials at mitigation so you lock in gains as price rebalances inside the prior range. And don't forget about time stop exits. If price stalls inside a block beyond your session, it's best to step aside. Liquidity dynamics really shift after the London and New York overlap. Now you've got the advanced blueprint break of structure versus change of character, liquidity sweeps, order blocks, breaker blocks, Wyckoff phases, and multi-time frame mapping. Drop a comment with the pair you're going to test this on, hit like if this unlocked new insight, and subscribe for the next deep dive where we'll code an algorithm to auto-detect these structures in real time. Until then, trade smart.